afternoon, everybody. You probably don't even need this microphone right now, but let me use it anyway. Welcome to another Access Program session, and I'm pleased to be able to present a couple of folks who specialize in one area that has to do with our final chapter arrangements that we've been talking about. Chris Frank is the agent for State Farm Insurance, and his office is over on Phillips Highway. Chris actually was referred to me by someone, and if you're in this room, I'm sorry, I don't remember who referred Chris to me, but the basic message was, you really need to talk to him because he would be worth listening to. So we had our chat, and here he is. He is accompanied by Brad Dantzler. Brad also works with Chris. Chris is a graduate from Illinois State University and has been with State Farm for about 13 years. He's had his office over here. He's been an agent for about 5 years. Brad has an interesting background. He actually worked for a while for Raymond James, but prior to that, Brad was a professional baseball player with the Blue Jays. But then he got smart and decided to go into the financial services area. So the two of them are going to team up on us. The little paper you have here is basically going to be their script as they go down the page. And Chris has told me that he actually encourages people to put your hand up and ask a question or make a comment while he's talking. So just so you know that. But you can also take notes on there, and I'm sure they'll stick around for a little while after the session. So with that in mind, Chris, it's all yours.
Thank you, Dan. I appreciate the intro. I appreciate the opportunity to be here today. And looking at your facility, I can't even imagine a more beautiful place to have a conversation, a professional conversation. When I look around, I'm just in awe. So in addition to that, when you have someone like Dan care so much about conversations like this, to ask speakers to come and really address these issues, we're all very blessed to have someone like Dan make the effort and arrange all of this for you. I know you're all aware of that, but it's just recently come to my attention, so I wanted to address that first and foremost. So without further ado, we're the ones that get to have the conversation about something in a lot of respects is rather taboo. But it's only taboo and it's only awkward if you allow it to be awkward. When you think of life insurance, you probably think of something that you do to make sure that your affairs are in order before it's our time. That's part of it. The other part of that is making sure that we don't leave behind a situation that takes away from your life, takes away from your accomplishments, and it really focuses your attentions on something that you really don't have time to do, and your beneficiaries don't have time to do that either. So, to put it mildly, our objective is to make sure that the emotional burden of losing a loved one doesn't become a financial one. And when you make it that simple, it doesn't really need to get any more complicated. And anybody that comes and talks to you about how complicated life insurance is and how many moving parts there are and really what you should do this, and this, they're just blowing smoke, okay? All you have to do is make sure that your affairs are in order with the right person, the right plan, that's basically benefiting you and your beneficiaries, nobody else. That's all that matters. It's not about me, it's not about LB, it's not about State Farm or any other life insurance company that offers it. It's about you and your loved ones, period. So the fact that we know that, I just want you to know that we come from a position of a fiduciary relationship. We will always do what's best for you. Individuals in this industry should always do what's best for you, period. So whether you like what you hear today, whether you like what you hear on an infomercial at 3 in the morning on life insurance, which I suggest you avoid those by any means necessary, it doesn't matter. As long as you do something, you're better off than you were before, I can promise you that. So Dan was actually gracious enough to put together a list of 9 questions that I've gone over, and it's just a perfect blueprint to really discuss some of the main topics that are most important to kind of check off the list when you're going down the life insurance lane, if you will. So the first question here, I'll just jump right in, and as Dan said, I highly encourage any questions. You don't have to wait until I pause. Raise your hand. You're not going to screw me up, I promise. We'll just pick right up where we left off. But a lot of times you have this question, you need to ask it before you forget it. And I'm the same way, and I'd love to address those issues. I'd love to have a conversation more than anything. I get sick of hearing my voice after a while. My wife would disagree with that, but I do. I'd much rather hear from you all, and that's why we're here today. Not for us, for you. We'll jump right in. The first question, why should I think about life insurance when I'm preparing my last chapter? And I think Dan would agree, that's putting it mildly. And it's okay. It's okay to say the words, why should I prepare for life insurance before I die? Mother Time is undefeated, okay? And that's okay. The important thing is we make the most of our time here, and we make sure that the emotional burden doesn't become a financial burden on our family. So why should we do it? If you don't, that's probably the best way to answer that question. A series of events will come down the road that your family will have to address head on in the middle of planning for the best party that they've ever thrown for you in their entire life, and that's your final send-off. They don't have time. They don't have the energy. They don't have the emotional comprehension to deal with those types of issues when they're planning to give you the send-off that you deserve. So you do it to make sure the family doesn't have to worry about what's next, okay? Because those conversations are very difficult. Those conversations I've had with individuals that have nowhere else to turn because they simply can't afford to plan for the next chapter. So why do you do it? 1, to remove the financial burden from the equation. There's no question. That financial burden is always going to be hanging over your head, and the longer you avoid it, the more of an issue it becomes later in life. I'll tell you this, and this is probably the last or the only sales types of conversation we'll have, is that life insurance is always going to be cheaper today than it will be tomorrow. And that's okay to admit. It's okay to understand. But life insurance at any time is better than not having it in place. So why do you do it? To avoid the financial burden, no question. Does anybody have any questions on that as far as the financial burden, what that means? We can dig into that a little bit as far as really the overall cost of funeral home care and the send-off, the big party that they're planning for their loved ones. We can address all those issues if you'd like, because that's important to know. I'll give you one statistic on that. In the state of Florida, the average cost of a funeral, burial, plot, and some of you have already planned for this, which is exceptional, it's anywhere between $10,000 and $25,000, depending on how big of a party you want to throw for the individual that you've loved your entire life. $10,000 to $25,000 without dropping a hat. And that number is only going to get more expensive the longer you wait. Number 2, what are the consequences of not having life insurance? I think we can dig into number 1 a little bit by answering that question. The consequences. Put yourself in a position of a loved one that's still around after you pass away. Imagine for a second what thoughts are going through their head. They just lost the love of their life. They just lost someone they spent their entire life with. And now all of a sudden they have to address this financial concern. This financial concern really removes you from the equation of being the loved one that you need to be and the loved one that you deserve to be at that time. So what are the consequences? How about debt? That's a big one. Debt can be passed on from generation to generation, and we're here to try to create generational wealth. And you do that by not going into debt initially. So the consequences, number 1, is debt. Number 2, you're pulled away from where you truly need to be, and that's with your surviving family members. Your time is being put in other places that really doesn't need to be there if you planned accordingly. There's a lot of issues as far as how do you access some of the assets that your beneficiary or your loved one has left. Without those types of things, such as a will, life insurance, beneficiaries written in stone, in other words, you're going to have issues with that for years upon years upon years. And a lot of times something as simple as a life insurance policy with a beneficiary can take care of all of that. Number 3, what kinds of definitions of life insurance are there? We'll keep it really simple. There's 2 kinds. There's term insurance and there's permanent insurance, okay? The difference simply is renting versus owning, okay? So a term policy is renting coverage for 10, 20, or 30 years. Simple as that. After the 10, 20, or 30 years, your time is up. You can renew the policy on an annual basis, but it gets ultra expensive, very, very expensive, almost to the point where you don't want it. You can't afford it. It doesn't make sense. It's not feasible to spend that amount of money on a term policy anyway. The price doesn't change throughout the 10, 20, or 30 years until the policy renews. But in 10, 20, or 30 years, you're right back in the same position that you were before the policy went in force. So that takes us to option 2, which is the permanent stuff. And you've probably heard of whole life insurance, universal life insurance, things of that nature. That's the equivalent of owning your life insurance. So renting is basically renting an apartment. Owning is basically owning a house and building equity inside of that particular policy. Every time you make a payment, you're paying yourself. You're building what we call a cash value equivalent. So there's a living benefit, which is the cash that you accumulate. And then there's obviously the death benefit that you most likely purchased the policy for in the first place. So those are the 2 types of life insurance. Does anybody have any questions on the types of life insurance, the differences? Because we can certainly expand on that a little bit as well.
So universal and whole are the same thing?
Very similar, yeah. Universal life is a form of whole life insurance. Whole life insurance has what we call dividends that accumulate inside of the policy, whereas universal life has cash value that accumulates. Now, dividends can be turned into cash if you want, but they can also be used to purchase more life insurance, which in some cases is more important than having just the cash. So it is a form of whole life insurance. Universal life is a little bit more flexible. For instance, if you have a $100,000 policy and the cost of insurance is $120 per month, you have the option to overfund the universal life policy to $150 per month. And that $30 that you really don't have to spend, but you're spending because you want to, goes towards the cash accumulation. And the cash accumulation right now with our policies are anywhere between 2.25 and 4% guaranteed. So those numbers are rather attractive to individuals that are trying to take care of that safe money, the money that they're not trying to roll the dice with. And if you have money in the market, you know what I'm talking about, because it does this, and there's really no way to know what it's going to do tomorrow. Nobody has a crystal ball. So in my world, especially being a State Farm agent, who's very conservative, very vanilla, in other words, we look at guaranteed fixed rates of returns, things that aren't going to surprise somebody tomorrow, opposed to how it was today. So every time you put a little bit more money into the universal life policy, you're paying yourself back and then some. The universal life and whole life insurance also is tax deferred. So the whole time that money is accumulating, you're not paying taxes on it every year, similar to a CD where you get sent a 1099. I love CDs. I have money in CDs. It's fixed. It's FDIC insured, only up to $250,000. But at the end of the day, if you're only getting, what, 1%, 1.5%, maybe 2% on some of the real aggressive CDs for a certain amount of time, a lot of times people look at the returns on the permanent life insurance and they say, hey, I need life insurance, and I would certainly like to accumulate more than just 1.5% on my money, which I pay taxes on every year. Depending on what tax bracket you're in, the 1.5 can turn into less than 1%. So when they look at the options of literally killing 2 birds with 1 stone, having life insurance and accumulating wealth, a lot of times the permanent life insurance, if you're eligible and if it's affordable, is a better option.
Thank you.
Absolutely. Good question. So I covered the first 3 rather quickly, and I think really the third one we can expand on for a long time, and I love to talk about life insurance because of the benefits and things of that nature. But what's good for me may not be good for you, and what's good for you may not be good for the person sitting next to you. So every policy that life insurance individuals who offer the products should put in front of you should meet your tailored needs, not the person that just came into the room before you. So it should be exactly what you're looking to accomplish. Any questions on those first three? As I said before, I do get tired of hearing my own voice, so LB is going to take the next couple, and if you have any questions, certainly recommend chiming in as you did. Thank you. So I'll be back in a minute, and this is Bradley.
How's it going? So you may hear LB, Brad. LB's little Brad, so I go by both, if you were wondering about that. So number 4, I'm going to kind of start there. At my age, what kind of life insurance should I consider? When we look at life insurance and talking about age, policies, we really like to sit down and look at the objectives. What are you trying to accomplish by purchasing life insurance? As Chris kind of alluded to, the same policy for him may not be right for me, for you, for the person sitting next to you. So to say there's one policy that you should consider, it's kind of throwing a blanket over everybody. You need to look at your specific goals of why you're looking to do this. So take, for example, our final expense policy. That's a policy most insurance companies offer, life insurance companies offer. And the name final expense, it sound kind of taboo, as Chris said, but basically that is a whole life policy. It's a whole life policy that is geared strictly towards those final expenses, funeral costs, and things of that nature. So if that's what you're looking to cover, then maybe looking at a final expense policy is something to look at. And now if you're looking to kind of build more of a generational wealth, you're expecting another 20 years or so, and you want to leave something behind for your children, your grandchildren, maybe you do look at a bigger term policy or even a bigger whole life policy, one of those variations. So I don't like to cast a big net and say this is what you need to look at, because I think I have policies. I have a 4-month-old daughter and a 15-month-old daughter. I have life insurance policies on both of them. So obviously a life insurance policy for my 2 daughters is going to be completely different than something that I would buy for myself or that you guys would consider. So it's really just about thinking what you're trying to accomplish and finding the policy that fits what you're looking for. Next we have, what would life insurance cost me? Again, kind of like number 4, not a very direct answer, but there are kind of three main factors that determine rating for any life insurance. Age is obviously a big one. The face value of the policy, so obviously a $10,000 life insurance policy is going to be less expensive than a $100,000 or $1 million policy. And then the final one would be your health. So not to get too far in the weeds, but with any life insurance, I guess with any reputable life insurance, they're going to do their underwriting on the front end, which basically means they're going to look at your medical history and things of that nature to determine your rate. And so there are companies out there that they may advertise kind of the late night infomercials, no underwriting, $15 a month, answer 4 questions and we'll give you a policy. The scary thing with those is when they do their underwriting on the back end, which means basically they review your health and things like that after you've passed away, there are certain exclusions that may prohibit them from even paying out if you, for lack of a better term, didn't die how they want you to, or there were things that were excluded from that policy. So one of the biggest things we look for is underwriting on the front end. You want to go with a company that's going to do that, so that everything is in place, you've been rated properly, so that the price that you're quoted, the price that your policy issues at, that's what you're going to be paying for. If it's term for the 10, 20, 30 years, or if it's whole life, that's the price you'll have until you file a claim on that policy. And So that's kind of to say that life insurance is going to cost you a set number. It's hard. I mean, the range is just so huge depending on, those three factors. So really and I think if it's something you want to have a conversation, we're going to stay here after. We can talk about your specific situation afterwards and say, hey, you could be looking at $30 a month or something like that. We can give you at least more of a ballpark. But to sit here and say this is what it's going to cost, it would be irresponsible of me to tell you what it's going to be. And then lastly, what can my life insurance be used for? Really, the final expense policy, that's one, it kind of leads you to believe it's, for final expenses, but the way most life insurance works and the way that I think we would both recommend structuring it is that your beneficiary gets the death benefit. So when you pass away, your beneficiary is going to receive a check for that face value of the policy. Just because it's a final expense policy doesn't mean it has to go towards your final expenses. Chris has alluded to, and I think it's a big thing in our office we talk about, you never know how you're going to react when you lose a loved one. Our main goal is to make sure that the emotional burden doesn't become a financial burden. Some people may want to not do anything for a year, sit on their couch and watch TV and just let themselves grieve. Other people may want to get to work, may want to go play golf every day for a year. I don't know. We don't know what the future holds. We don't know how we're going to respond to that. So that money, it's not, we're not going to have a funeral home listed on the policy, or I wouldn't recommend having a funeral home so they get the check. Your beneficiary who you decide, maybe, we see it all over the board. Sometimes, if you have a couple of kids left, you say you have 3 children, divide it up 33% to each of them, and they each get a check, and maybe they pool it for the funeral expenses, maybe they don't. Like you said, Chris was saying earlier, some people have already planned for that. I know a lot of people do, prepay for their funeral and things like that. So if that's something you've already done, then the cash is, there's no rules. We've had people set up a scholarship fund with a death benefit. So really, it's whatever you guys decide is right for you. That's where the money would go. So I think that kind of finishes off number 6. Do you guys have any questions for me on any of those? So I'm going to pass it back to Chris and let him finish up these questions.
So we've been able to go through questions 1 through 6 in less than 25 minutes, and that's great. I want to make sure that everybody is comfortable with the answers, the explanations, the word tracks that we've given thus far. And I can assure you this is about you, and I'd love to engage in a conversation. So if you have anything, if you want to say anything, please don't hesitate to raise your hand. And if not, we can jump right into number 7, which is, in my opinion, one of the most important points on this handout. What do my heirs need to know? Seems like a rather simple question, but you'd be amazed the conversations that I've had in 13 years and the things that I've seen over the 13 years about life insurance and how it unfolds. I'll give you 2 statistics. I'm really not a stat guy. My math teachers would agree with that entirely. But at the end of the day, when it comes down to the percent of the population every single year who shops for life insurance, anybody have an idea what the percent of the population each year shops for life insurance? Anybody have a guess? 10%. 10%. Anybody else? 2%. I'd be out of a job if it was 2%. Anybody else? 40% of the population every single year shops for one form of life insurance or another. The second statistic that I'm going to give you is the fact that half of those policies are never claimed. So if 40% of the population, and I'm, again, no math major, is shopping for life insurance and only half of those claims are filed, it seems as if the life insurance companies are kind of hedging their bets, that maybe that life insurance policy is going to be filed away and nobody needs to file a claim. Life insurance companies are inherently good. But the best ones are the ones that have a connection with the Census Bureau, the Department of Motor Vehicles, anybody and everybody that has access to a death certificate. Because those life insurance companies report that if there's ever an instance where a death certificate comes across, they're notified. We pay a fee to be notified when somebody passes away. And the next of kin, the beneficiaries, don't necessarily produce any type of documentation that we start the claims process. People tell us when people pass away. And we pay a huge fee for that, but it's just the right thing to do. So we're trying to cut down on the half of policies that aren't filed. But to avoid that, the first thing you should do is let your family know that you just took out a life insurance policy, first and foremost. Say, hey, listen, I know this is kind of a conversation that you don't want to have, and it's rather awkward, and we just finished Thanksgiving dinner, and we're about to go out and have some more fun with the family and everything, but just so you know, I just took out a $150,000 life insurance policy, and your name, your sister's name, and your brother's name who missed Thanksgiving dinner is still on the policy. Those are the conversations that you have to have. You have to let people know of the responsible acts that you've just taken that set them up for financial success, for financial growth, to avoid debt in the future. So letting them know first and foremost that you have a life insurance policy. That's number one. Number two, let them know where the policy is. Let them know which file cabinet it's in, or at least let them know who their agent is. If anything happens to them, you've got to let the beneficiary know which company it's with, just so they know to go knock on the door or make a phone call. Because if you know where the policy is housed, and that policy isn't sold to another life insurance company, chances are it's one phone call you make and you're talking to somebody that has a checkbook. And those are the individuals that make the differences, the ones that have the checkbooks. I can tell you a quick story, and one of the reasons why I got into this line of business in the first place is because everybody says when they graduate college that they want to make a difference. They want to do amazing things with their talents and their abilities. They just don't know how to focus that. Sometimes it takes them years to decide and years to come up with an answer to that question, but I thought I was going to be an attorney. Are there any attorneys in the room? Okay, so free to speak clearly? Okay, I'm very glad that I didn't become an attorney. One reason is because I wanted to spend time making a difference the right way. Now, there are a whole host of attorneys that do it the right way, but we deal with attorneys every day that don't. So if I was going to make a difference in somebody's lives and I wanted to have the financial freedom and personal freedom, I wanted to do something that made a difference in the worlds of individuals that I come across. And that's, hey, everybody has to buy insurance. You deal with them on a daily basis, and you get to make a difference. How? Well, about 12 years ago, I read a story, and I put myself in the position, and it just made a difference. The story is about an individual that passed away untimely, a very young individual, and that individual left their family a large life insurance policy, and as LB mentioned, what you can do with that money is just amazing things. You can set up a scholarship, you can set up a trust, you can do things that just absolutely make a difference in people's lives. But before that, I went to a funeral one time and everybody was handing out casseroles. Everybody was coming up to the surviving spouse, and they were giving her a big hug, and they were telling her, if you need anything, let me know, I'm there for you. And Lord knows they all meant it. And they all put their heart and soul into those casseroles. But out of the corner of my eye, I noticed that this guy came in dressed similar to me today, actually. And he went up to the surviving spouse and he said something in her ear. I couldn't hear it. And he reached into his pocket and he pulled out a check, and she started to weep. And it was basically her life insurance agent. And out of all of the people there, he may have known that individual the least as far as an individual basis. But I promise you, he made the biggest impact on her that day. He was the one that made all of these issues and problems and concerns in her head financially go away completely. So in my opinion, there's a whole host of ways to make a difference in people's lives. If I could be that guy to make a financial difference in the life, I thought that was pretty commendable. I thought that was worth doing. And then that's, in a weird way, that kind of took me away from the line of law and into the line of life insurance and property and casualty insurance, because that person made a difference more so than anybody in that room. And it was a pretty big room, I will say. So, in other words, I know that's kind of a long answer to the short question. What do my heirs need to know? That you have a policy, who it's with, who the agent's with, how much is it for, who the beneficiaries are, and where to find it. Because those are the policies that make a difference. If nobody knows about that policy, how can it make a difference? The only thing it's done, it's cost your loved one a monthly cost of insurance every month, and that's not what it's intended to do. It's intended to make things a little easier when you lose your loved ones, at least financially. Any questions on number 7? Number 8, will my heirs be taxed on the insurance benefits? Great question. That's a point of contention for a lot of insurance agents going on right now in the state of Florida. Every year, a group of us hop in a car and we ride over to Tallahassee, and we have a day at the Hill, is what they call it, because there are legislatures, there are interest groups that are lobbying to tax your life insurance benefits, as if the federal government doesn't have their hands on enough, and Uncle Sam's always getting their share. Now they're trying to get their hands on your life insurance benefits. That's not theirs. It's not even ours. It's for the ones that we love. So I have a personal issue with that, because I'm taking this giant policy out. I'm protecting the ones that I love, not for me, but for them. So they're taking money out of my wife's pockets, my children's college fund. At least they're trying. But for the last 5 years, we've been successful on a vote. It was 68-1, and then the other time it was 72-1, and it's not an issue yet. But if it's an issue enough to take a vote at the House, it's a potential threat. So I'm just putting that on your radar. But as of right now, the life insurance will not be taxed. The death benefit is 100% non-taxable. So if you've got $1 million life insurance policy that goes to your beneficiaries, they will literally be getting a check for $1 million plus whatever dividends is inside of that policy if it's a permanent policy. It could be $1.5 million by the time you pass away. And they're getting a check for the entire amount. There's no service fee, there's no handling fee, there's no delivery fee that I get when I literally do that. It's not like that. So it's up to us and everybody in this room and everybody that has a voice to make sure that that never changes. One thing that will be taxed, I can tell you that, is your estate. So if you've ever been sitting at a coffee room table or a dining room table and somebody said, yeah, I just met with my attorney, we had to do some estate planning. And they come off sounding like they're the most important person in the room, but really all it is estate planning is making sure that your collective assets that you've accumulated over a lifetime don't become the possession of the state of Florida. Excuse me. So your estate is something that is taxable. And if your estate is valued at $4 million when you pass away, I can assure you that $4 million is not going to be left to your beneficiaries or to your next of kin or to your family members. Uncle Sam gets his hands on land, stock, any types of bonds, things of that nature. Anything that's regulated or tax advantaged is subject to taxation with your estate. So how we avoid that is we put life insurance policies in place that make up for the taxes that will be taken from your estate. And there's a very, very good calculator online now. I can give you the link and I can pass that information to you afterwards. There's a good calculator that tells you what your estate is worth and what the projected taxes would be on that estate. And then if we know what the projected taxes would be on the estate, then we simply put a life insurance policy in force that covers for that estate tax. Because then it seems as if it passes through. Nobody skips a beat. Everybody gets paid the value of the estate as far as your beneficiaries are concerned. Uncle Sam still gets paid, but you're not void that dollar amount that's just gone. Poof, in the middle of the night. Any questions on number 8? That's an important one, estate planning. Number 9, probably the easiest one out of all of them, best for last. How do they collect their life insurance money? Unfortunately, it's one of the hardest things that I have to do. But when you make the difference, like the individual did in the room full of people at church with the casseroles, and you literally write the check before you leave for that funeral or the wake, whatever it is, and hand it to the survivor, to the beneficiary. That's making a difference. Giving the hug, saying, hey, if there's anything else you need in addition to this $1 million check, I'm literally just a phone call away. But we hand you the life insurance money. If you can't get to me and I can't get to you, we wire it to you the day that we see the death certificate. We give it to you as fast as humanly possible because in our eyes, it's not our money. That's your money. So another word for life insurance is love insurance, and that love that your family has thought of, that you will think of for your beneficiary, should be passed as soon as humanly possible. So that's our commitment to you. As soon as you produce the death certificate, we literally cut the check and either wire it, drive to you, and hand it away. It's yours. So there's no middleman. There's nobody that's going to step in. It's difficult to write the policy, service the policy for all those years, and then pay the claim. But it's the same person, at least with us, that does that. And I think that builds equity. And even more so than equity, emotional equity. We're going to do everything we can to deliver it as fast as humanly possible.
Chris, I have a question about what you were just talking about as far as handing a person the check. If an estate goes into probate, does that delay or interfere with the insurance payout?
Great question. Probate is really the bane of our existence when it comes to moving in the right direction, as far as you just lost your loved one, you're planning for the funeral, the burial, the next chapter in life. Probate will hold you back months, years. I lost my grandfather 5 years ago, and there's still some of his money held up in probate. The life insurance is the exact opposite of that. The life insurance will not conflict with probate court. The life insurance will not hesitate because of an issue in court. As long as the beneficiary that's on the policy is alive at that time, there is no holdup on releasing those funds. And we made the mistake with my grandfather, and I think Dan and I spoke at length at my office one time. We made the mistake with my grandfather, who was a very successful Pfizer representative, pharmaceutical sales. He drove all over the Midwest, sold a bunch of pharmaceuticals, made a lot of money in the process. And when he was making money, he was investing back into Pfizer because he believed in the company and it was just taking off. He had millions in Pfizer stock when he passed away. And shame on us for just assuming that we would be able to use some of that money to pay for his final expenses, because we couldn't. It was held up in probate for months. And like I said before, there's still money that we haven't been able to access. And I don't want it to sound like we're trying to get his money still, but that's his money. We're trying to do things creating generational wealth for his great-grandchildren, for his children, things of that nature. But as far as the life insurance is concerned, that's a great question. Whether there's a holdup in probate or not, the life insurance is released immediately. There will not be a conflict of interest there.
Does an unclaimed policy ever expire?
Never. That's the beauty of it. Insurance companies are on the hook because of that fiduciary relationship to do the right thing. At least the good ones are. And if you don't find out that your loved one had a life insurance policy for 10 years after the fact, and somehow you stumble across, there's no statute of limitations as long as it's with the right insurance company. And most likely, when I say the right insurance company, that doesn't necessarily mean it's State Farm, there's so many great life insurance companies out there. But the ones that, like LB said, do the underwriting on the front end, the one that charge an adequate rate, not $11 for $1 million of life insurance, the ones that meet with you, shake your hand, collect signatures, service the policy, send you renewals, never sell the policy to another carrier, those are the policies that will act on any type of a claim filed at any time. So it's important on a whole host of factors to pick the right insurance company, but no more important than that reason right there. But the statute of limitations is very different on life insurance opposed to a hail claim or an injury claim in an automobile accident. There are certain time frames that you have to keep in the back of your mind on those types of claims. But with life insurance, as long as it's with the right insurance company, there's no statute of limitations.
What's involved in underwriting?
Yeah. The bigger the policy, the more involved you will be in getting that policy issued or receiving a declination. So when we talk about the underwriting process, there's a whole host of people thousands of miles away that are really smart and don't have much of a personality. And hopefully nobody was an underwriter in here, because I'm not trying to offend anybody, but after 13 years of dealing with underwriters, not just with life insurance, but all hosts of insurance, these are people that you probably aren't going to go out to dinner with. But they know their stuff. They're trying to find out how healthy you are or how unhealthy you are. Not to save you money, but to charge you a little bit more on the front end. And they call it a table rating, but that's just a nice way of saying surcharge. But the bigger the policy, the more underwriting you'd be subjected to. For instance, on a final expense policy, which is basically our bread and butter for individuals over the age of 50 at State Farm, there's very little underwriting that goes into issuing the policy. We may come to you, ask you a couple of very, very generic questions, such as, have you had surgery in the last 3 years? Have you ever smoked? Have you received any disability benefits within the last 36 months? Are you a pilot, a scuba diver, a rock climber? Do you have a race car? And have you ever won the Indy 500? Those questions are basically the extent of the underwriting that goes into a final expense policy, because it's only $10,000 of benefit, okay? Now that $10,000 grows over time, so by the time you need it, it could be $15,000 or $20,000. But we're not going to spend a whole lot of time, resources, energy, and money underwriting you when it's just $10,000 we're on the hook for. And if anybody tells you any different, they're not being honest with you. So you look at that scenario, $10,000, there's not a whole lot that goes into it. $1 million? We have to do all of that stuff, ask you those questions. Most likely you'll have to give blood. You have to do a urinalysis. You have to name your firstborn after us. You have to prove that not only are you healthy, you're healthy that day. So underwriters aren't necessarily looking for, okay, you've had 10 years of just immaculate health, and your blood pressure is 110/60, and you're a rock star. You just got done running 5 miles. If you do all of that, that's great, but unless you're that healthy the day that they do the underwriting, you're still going to get a standard rating, or maybe even a table rating, which is a nice way of saying surcharge, like I said before. But the more coverage you want, the more underwriting, the more sure we have to be, because who's to say, and again, I hate saying on this, I think that's wood, I hope it's wood, so I'm not going to. If you take out $1 million life insurance policy, and it costs maybe $200 a month, you pay us 1 month of the premium, you pass away 3 days later. We paid out $1 million and you paid us $200. So the risk, the element of risk is always on the insurance company's side. We're the ones taking the risk on you. So make sure it's with the right life insurance company, because you don't want that life insurance company underwriting you after you pass away, like Bradley said. Because they're going to underwrite you. I'd rather know before I pass away if I'm going to be covered or not. And I've seen instances in the past where people take out this policy, they think it's the best thing in the world. It's only $25 a month. I bought it at 3 a.m. when I couldn't sleep one night. And when they pass away, their loved ones get a check back, but only for the premiums that their relative paid for the last 2 or 3 years before they passed away. So take $25 times 12 months times 3 years. That's your check. That's your death benefit on that type of a situation. So that's the difference between a life insurance company who does it the right way and who doesn't, and they're out there.
There are times when a person will lose a loved one and, let's say, remarry. You don't necessarily know the history of the person you remarried in terms of their insurance plans.
Right.
You may not even know they have something.
Right.
What happens if you try to find
Great
whether or
question.
not that person had a policy?
Great question, and that is usually left up to the insurance companies who subscribe to the carriers that are notified by the Census Bureau, the Department of Motor Vehicles, anybody who has access to a death certificate. Those situations are very common, especially in the state of Florida for one reason or another, but if you have no idea what policies are in force and you've never had that conversation, I guess it goes to the question, what do my heirs need to know? Number 7, going back to, like I said, that was one of the most important things to know, is to have that awkward conversation with your beneficiary and to be able to forward that conversation in the form of a written will or a conversation with an attorney. But if you've never had the ability to do that, if you don't think about it, if you just never get around to it, maybe you think about it every day, but you just never put yourself in the position to have that conversation, it's even more crucial to do business with an insurance company who does it for you. And those are the ones who pay a fee to be notified by the individuals that see the actual death certificates that come through. Great question.
More questions from anyone? Pass that.
You mentioned 10, 20, 30-year term policies. What about an annual renewable term policy?
An annual, good question, an annual renewable term policy usually is only available when the term on the original policy, the 10, 20, or 30 years, expires. So a lot of times an insurance company will say that we're willing to offer you that annual renewable policy, and it's going to get more expensive every single year after that. And when I say more expensive, if your premiums are $250 this year and you renew it on an annual basis, it may be $280 next year. Okay, $30 a month, 12 months in the year, I can handle that. But years 3, 4, and 5 on an annual renewable policy are always kind of the kick in the gut. Those are the formative years that you'll either decide to be all in or you'll decide to go without. And that's such a crucial amount of time that we have to choose wisely, most likely before that annual decision is being made. But the annual policy is something that you'll probably steer away from unless you can somehow get the premiums down. And usually the only way you can get the premiums down are to lower the face amount or to go through underwriting again and to start from scratch. And the older I get, the less I want to go through underwriting. So it's a great question. It's available, but most likely after a 10, 20, or 30-year policy expires. But you really don't want to pay more for your insurance every single year. You should lock something in. You should get a fixed rate. The older I get, the less surprises I want. I've got twin 3-year-old boys at home, and I have enough surprises when I go home every day from work to last me a lifetime. The last thing I want is the policy that's supposed to take care of them and my wife to change on me. And change can be face amount, it can be price, it can be the provider who's actually covering the policy. Change is not good when it comes to life insurance, in my opinion, especially the older we get. Anybody else?
That was really informative. I have one more question for both of you.
Please.
How are the Cubs going to do this year?
The Cubs. They still have a team? Yeah.
Obviously a White Sox fan.
I was a Cardinals fan being from the Midwest, but I have an American League team. I'm a Yankees fan, so I'm sure I'll lose friends on that, but that's fine. I don't know how the Cubs are going to do. I'll have to ask my wife. She's the diehard. But Having someone like LB in my office who's been there, done that, who's seen the world, who's got a completely different perspective, playing professional sports, but finally having that internal conversation that it's time to get a real job. It's a hard one to have. I was never good enough to have that conversation with myself, but LB was. And for him to choose this line of work, it tells you two things. One, it's a great industry to be a part of, and it just really shows that what he's trying to accomplish and how he's trying to help people. And if we have more people like LB and my team doing this, the world of life insurance will be okay. You know, we really will.
Chris and LB, we thank you very much for coming in and talking with us, and I'm sure you'll stick around for a little while.
Absolutely, be
want
glad
to talk
to.
with you some more. Thank you all for coming, and next month we may have a return engagement from our attorney. So,
Excellent.
thank you. We're done.
Thank you for the opportunity.